much money do I need to make? Let me give you a couple of different scenarios, and then you can let me know what someone would need to make in that scenario.
Okay.
So let's say, housing prices have gone up. We have a $300,000 house that people are interested in, and this imaginary person has a 700 credit score. They're planning on putting 5% down. In this scenario, they have a $275 car payment, a $200 student loan, and everyone's got a little bit of a credit card. So let's say the minimum payment on their credit card is $25. So in that scenario, more or less, what would the payment be, and how much money would they need to make in order to qualify to buy that house?
Okay. Well, every property has different taxes, homeowners insurance. But just to give you a ballpark, you're going to be looking at around $1,650 and $1,800 a month in payment. If you have a homeowners association, you pay that separately, and that would be a little higher.
Okay. And how much would they need to make, either monthly or yearly, in order to qualify for that?
Well, with those numbers that you just gave me, I would say about $4,500 a month, and that's about $54,000 a year.
Okay. I mean, that seems achievable.
I think so.
And with prices where they are today, I think $300,000 is the new norm for your standard 3-2 in a good area. So
in Central Florida, I believe that's what it is.
Yeah. Well, look at that. I just know the numbers. So let's give you let's switch it up a little bit. So let's say that this individual doesn't have as good. It's a couple, and the lower of the credit score is 660. So you always take the lower credit score. They have 2 cars, which both total about $600 a month. Their student loan balance, they don't know, what the monthly is, but the student loan balance is $60,000, and they have $120 minimums on their credit cards. So again, and the house is $365,000. That's an important thing.
Yes.
They want a little bit better than average. How much would they need to make? What would their payment be? And does that $60,000 student loan balance mean anything?
Okay, so a lot of questions, a lot of things we can talk about this particular scenario. So usually with a 660, we are going to go with what's called an FHA loan. It's a government loan. The guidelines are a little bit more flexible. The reason we will go with an FHA loan is because conventional loan requires a higher credit score.
All right.
If we try to go conventional, which we can always try, your mortgage insurance, because you're putting less than 20% down, is going to be really high.
Okay.
So we can always compare. We present the options, and the borrower decides what way they want to go. But with that scenario that you just gave me, I would say your payment will be around, again, depending on taxes and insurance, between $2,300 and $2,400. You will have to make about $7,500 a month.
Okay, so that's like $90,000.
Yes.
Which for 2 people, that's about $45 a piece. I mean, that's not unheard of. So I think that's a scenario where it would work.
Yeah, if you have 2 borrowers, yes.
And with that FHA, I think I forgot to mention 3.5% down payment would get them into that property as well.
Which is the minimum down payment. I mean, you're always welcome to do more, but if you're tight in money, 3.5% is the minimum.
Awesome. Well, look, that was kind of fun. I'm glad we did those 2 different scenarios. So let's talk a little bit about the 1% rule when it comes to student loans. So in the scenario I gave you, we had a $60,000 loan limit. My payment is really only $250 a month, but there's a guideline with FHA that you have to follow.
That is correct. FHA has a guideline that tells you that you have to take 1% of that loan balance and use it as a payment.
Oh, wow.
So in this case, a $60,000 loan, we have to use a $600 payment.
Oh, geez.
And that can be tough.
Sure.
Because, some people are not making payments. Some people are paying, like you're saying, $200.
Right.
But we can't use that number. We have to go with a 1% rule because in the next 30 years, they are going to be making payments.
Right. So, and there could be a fluctuation in that payment depending on how much money I make, right? When it comes to government student loans, there's some different caveats that they have in there. And they're trying to protect themselves because the government's also loaning you or backing the loan for the FHA loan. And so they want to make sure that they can run the gamut on what your payment could be, and you can still be comfortable
Exactly.
in that home and not be just completely strangled because you have all these additional payments.
They don't want to put you in a bad position.
Yeah, which I respect that, but the downside of that is if I really am making a $250 payment, they're using $600 for the calculation. That's putting downward pressure on my top limit of what I can purchase.
Correct.
So it's just important to know and to take that into consideration. And it's not your fault and it's not my fault.
Nope.
It's just the way it is.
It's the guideline that we have to follow.
Gotta follow it. All right.